have a class to get through. I'm glad you're here with me today. We're going to be making some kind of work on our groups, but we're also going to. I said both groups didn't go, didn't we? Oh, you guys didn't go. So we have one more truth or dare, guys. Do you choose truth or dare? I like the dare one. Let's go. All right, dare. I dare you guys to go out the front of the building, run over to the library, and back. I dare you. All right, let's watch these guys do it. All right, you can certainly try. All right, say hi to Mrs. Bauman now. All right, now I want you guys to encourage them, okay? Come on over here to the door. You guys are doing great! Make some room, guys. Make some room. Nice job. Come on in this way, guys. Good job. All right. Well done. Well done, guys. Well done. Come on back, you guys. All right. Now we're going to eat class code after I give these guys their question. All right. All right, gentlemen, since you just proved me that you are good runners, you can ask me truth or dare, and I'm going to choose, because I just did 20 push-ups, I'm going to choose truth. What is the truth you would like to know, guys? I'll put it this way. You guys have a reservation anytime in class that you can ask me a question. All right? All right, guys, thank you for playing along with me this morning. This is the second to last day before break. We're all tired. I'm tired, you're tired. We're going to get through this together. Guys, just a reminder, today we're going to be picking 3 to 4 stocks. We'll be breaking during class, some time for that. And a reminder about Mentorship Day on the 25th. Now, guys, here's the thing. The stock market, we like to say, hey, we're going into a recession, we're scared. Or if we're excited because we're in a bull market. If the market is moving, what kind of market do we have? There's a lot going on. People are optimistic. They're charging for it. What kind of market do we have, guys? We got a bull market. And right now, we're in the middle of a bull market. Well, the good free ride can't last forever. Guys, if you look at our most recent recession, back in 2007 to 2009, what caused that recession, by the way, guys? The housing bubble. Because we had all our wealth tied up in housing. And our percentages dropped by like 52%. Yes, sir? Oh, ask me your question.
Your wife.
Oh, okay.
Was she like the first choice you wanted to marry, or was it like someone else?
Oh. Wow. Okay, you're going to know too much about me. But my wife is absolutely my first choice. I never planned on getting married. And I met her, we dated on and off for a decade. Literally a decade. She was with somebody else, I was with somebody else. We'd break up, we'd get together. Finally, I ran out of reasons to say why this isn't the best thing that ever happened to me. And so I said, if I don't marry this girl, somebody else is going to. So she was the first woman I was ever serious about marrying. So that's absolutely the truth. She makes me a better man. So if you find that person who makes you a better human being, snatch him up, grab on, don't let go. So, love that one. But anyway, sometime I'll bring her in. You guys can meet her and tell her all the terrible things I say. But the recession we had back in 2008, 2009, people literally lost half or over half of their corporate wealth in the course of a couple of months. It was bad. Here's the trick too, guys. It's going to happen again. If you want to know, for example, I'm sorry?
No, it's all right.
If you want to know why, for example, you want to diversify your portfolio with stocks and bonds, because things have different ways of measuring and weathering those kinds of recession. So to continue, guys, and did you guys have a question, by the way?
No.
Oh, okay. Guys, in terms of buying stock on margin, Who here has ever purchased something on a credit card? I have too. When you're buying stock on margin, you're basically buying stock on credit. You're putting part of the money down or maybe even none of the money down, and you are buying the stock on credit. What's the risk there if you buy something on credit, guys? What's the big risk if you buy something on a credit card? Interest is part of it, for sure. But what's the other risk? The other risk is that you can't pay it off. If you buy a stock and it appreciates in value, you can actually pay back your purchase price based on the revenue you're making from the stock. If it loses value, it's like being upside down in a car that's lost its worth. So it's a big difference, and it's a big risk to buy stock on margin. So when we look at stock quotations, and again, how many of you, just by show of hands and no judgment at all here, but how many of you are using either Yahoo or Google as your stock aggregators? Awesome. Guys, all these things I'm going to cover in terms of things you'll see in the stock quotation, you'll be able to find right in Yahoo or Google, whichever one you're using. So if you get the highest and lowest price for that day, for example, you want to know, did it go up or down in value during that day? We can also see in terms of the last year, the last 52 weeks, what is this stock doing? Is it going up or down, or is it all over the place? We can find out if we paid a dividend or not. Did we actually play bus10110162019? Did we pay out to our shareholders? We can also see how much got paid out. In terms of ratios, when you say price and earnings ratio, that means for what the stock costs, how much of that actual worth is coming back in percentage of earnings. In other words, if I have a stock that's $10 and all of a sudden in 2 weeks it's worth $15 and I made 50% increase, that's like a 2-to-1 ratio. Also earnings per share and number of shares traded, that's volume. Guys, if a lot of stock is moving in a market, what does that indicate? What could that indicate? If a lot of people are trading a particular stock. Any guesses? No harm, no foul, because you won't have a wrong answer. Yes?
That particular stock could be a little overvalued. Like people are getting up.
It could be overvalued, or it could be a hot stock too that people are actually wanting to get. It could be, for example, if the stock is taking a dive, people are buying it also while the price is low. It can mean a lot of different things. But by high amounts of volume, there's not one particular universal earning. This is just an example from our friends at Yahoo. And all the things we just talked about you can find right on here. Again, from showing you on Yahoo the other day. We see what this closed at previously. And this happens to be Microsoft. Closed for $20.24. Today's open, it was $20.37. It peaked out at $20.40 and bottomed out at $19.98. Our volume, we had about 54 million shares traded. All of these things we just talked about, you can easily find on a stock quote. And remember, guys, when you're putting together your portfolios, don't recreate this stuff. Copy and paste it so long as you cite it. Now, in terms of where you can find information, I talk a lot about Yahoo simply because I use it a lot. But you can use any of these sources or find your own sources. How many of you are using your smartphones for this game? Are you using the built-in app?
Yeah, I use E-Trade.
Oh, E-Trade, even better. And by the way, you actually play in the markets on E-Trade? Yeah. What's working well for you? What are your good stocks?
SPY.
I'm not familiar with that brand. What do they make?
It's like a bunch of companies all in one.
Oh, so you're doing a mutual fund. Yeah. Nice. Guys, and we're going to talk about why mutual funds are a really great idea. Are you seeing some nice gains? Yeah. Excellent. My big winner for the last year has been Planet Fitness. I bought at 27. It peaked at about 78. I wish I had bought more shares. How's that for a gain, though? Like, seriously, I think Planet Fitness's business model is going to do good things for them. Anybody know what Planet Fitness's business model is, by the way? Most of you guys in here are performance athletes, so you're not Planet Fitness's target customer. Who is? Yes?
Like regular people.
Exactly. I'm their target market. I'm the 40-something person who is trying to get to the gym on a regular basis. Now, here's their business model. Does anybody remember what Planet Fitness charges per month? They're very famous for this.
Isn't it like $10 or something?
$10 for gym membership. They're actually betting that most people will not go to the gym. So what their business model is, for $10 a month you can join. You get the psychological high of saying, wow, I'm taking steps for my health, I'm signing up for the gym. Most people who buy a Planet Fitness membership never go. The other part of it is, at the end of the month, you're taking out $10 off your credit card or out of your bank account. Does anybody here really miss $10? and that's how they're making money. That's why I thought the stock was a good pick when they went public, because it's going to be a perpetual brand. And for that person who's saying, wow, the waistline has gotten too big, it's time for me to go back to the gym, I'm glad I kept my Planet Fitness membership. After they go back for 2 weeks and quit going again, Planet Fitness is still going to be there. Pretty interesting. Now, guys, in terms of bonds, we talked a little bit about this, but I want to illustrate the point that if you get to BA or BB and lower, based on the groups that are doing the bond ratings, you're getting into junk bond territory. The lower the bond rating, the higher the what? Risk for sure. Is there a higher something else for investors?
Interest.
You got it. Higher interest rate, because you're saying this person's got bad credit. We're going to pull them back in, and we're also going to make sure that they pay more for lending for borrowing this money from us. But it's higher risk that you'll actually get it paid back. If you're buying a bond, again, you can buy bonds on the same trading platforms that you can buy stocks on or any kind of securities. What we're talking about here, first, what's your interest rate? 7.3% is a pretty good payback rate. If you're getting 7.3% on a bond, not too bad. Your yield means what's your expected annual income. The rate of return is based on holding the bond for the entire period of its worth. The yield to maturity means if you hold that bond the entire time, how much money will you make? So it's very straightforward. It's very similar to what we're talking about with stocks. The higher the interest rate, generally speaking, the higher risk the bond, but the greater potential return. Anybody here a regular viewer of CNBC? So, you know when they're doing the round tables and they're in the stock market, have you seen those?
Yeah, my mom's a financial advisor, so it's like always on at my house.
Wow. So you guys are always watching CNBC. Do you like Mad Money?
No, I don't watch it. Normally it's just like when I like leave in the morning, it'll be on like the opening, and then normally I'll come home and it'll be on the close.
Okay. If any of you decide to go on the New York trip this spring, you're going to see CNBC live in action. They're actually broadcasting live on the floor of the stock exchange, and when you walk behind them, you can literally wave and get on camera if you want to. There's not much going on there. But if you're watching CNBC, for example, when they're quoting percentages of $1,000, they're talking about interest rates. Sometimes, for example, if there's a 9% bond that's due in 2022, they call it 9s of 22. That's some lingo from the business. So 9% bond due in 2022 is 9s of 22. Let's get into mutual funds. We're going to hit a couple more of these slides before we let you get into your groups to discuss your stock picks. Grant is investing in something called a mutual fund. And here's why mutual funds are a good idea. When I ask this question, I'm going to share with you on your votes as well. Who here considers themselves to be an expert in picking stocks? Who here thinks that it's a very mysterious thing, they've got a lot to learn about? Yeah, me too. Which is why I don't put all my money straight into the markets. I put it into mutual funds. Mutual funds basically are, let's say, for example, all of us together can't buy partial shares of stock. There's no way I can call up GE or go to my broker and ask for a partial share of Uber. When you have a mutual fund, you sort of can. Here's the way it works. If all of us wanted to be together in a mutual fund, we could pull all our money, and a qualified investor, probably a group, somebody like Citibank or Merrill Lynch, or you pick your advisor group, would take all of our money and play the markets with it. Now, presumably, you're giving your money to people who have better expertise than you do. For example, my mutual funds, my retirement is through a group called Tia Cruff, which serves the education industry. We can all pull our money and hopefully make money on it. If you're going to a good investor, a good institutional investor, they're going to mix up your money in multiple funds, and you're going to get to say how much risk you want. Now, that's one way to do this. Who here has ever heard of an ETF? Do you have any idea how those work?
My mom will like talk about them and then say they're like a safer bet, or that people will sometimes request them when they want to get a lot of gain quickly and safely.
I think it's a great description, and I'm going to give you guys a very vernacular description here. All right, this is a question. If you don't know the answer to this, that's okay, but I suspect some people in here do. Who here knows how they make sausage? How do you make sausage? Yes, how do you make sausage? Exactly right. Most sausage is a combination of beef and pork. Sometimes there are other kinds of meats you put together, and you grind it up and you package it as sausage. An ETF is financial sausage. What an ETF does, essentially, you have a group that's like a mutual fund, but different. They'll take investors' money and put it into multiple stocks. And as a result, you literally, in this one particular instance, if you buy a share of an ETF, if you invest in an ETF, an exchange-traded fund, you're actually buying a stock that's made out of pieces of a bunch of other stocks. This is the only way you can actually buy a partial share of stock. So it's like, for example, the terrible question is, what's in a hot dog? We really don't want to know. It comes down to the fact that things that are packaged like that have multiple things in them, some good, low risk, some bad, high risk, and they're all packaged together. So an ETF is delicious grilled financial sausage. Who here likes Italian hot sausage, by the way? That's like my favorite thing at the fair. It's the best thing ever. So that's what an ETF is. And if you want to know, guys, in terms of mutual funds, this is a little kind of anecdotal thing, but I think you might find it interesting. Check this out, guys. Most people who have mutual funds are people who are investing in their retirement. We go back to 1980, back when I was a little kid. About 5% of households in the entire United States have mutual funds. We go back to 2017, almost half do. Why is that, guys? Why are so many more people investing in their retirement now? Yes? Yeah, I mean, Social Security is going down like a flaming plane wreck. And, you know, I hope that we salvage something from it. That's half of the equation. Anybody know what the other half might be? This is a complicated one. Guys, here's the deal. In the old days, people worked for the same company from the time they got out of school to the time they retired. We called it cradle to grave. And here's the way cradle to grave worked, guys. You basically worked for an employer, and they put money back for you and said, this will be your pension when you retire. The employee really had no skin in the game. You basically were saying, I worked for you, employer, now you're going to take care of me. In the modern era, 2019 and beyond, it's really on us as the employees to invest in our own retirement because most of these pension plans are going away. These pension plans were tied to things like the steel industry, coal industry, big companies. Very few people actually have traditional pensions now, which is why so many more people are putting money into this. I'm not going to spend a lot of time talking about the different types of ETFs. If you remember that an exchange-traded fund simply means you're buying financial, in fact, that term, I love that term, financial sausage, delicious grilled financial sausage. It sounds so good. And you can also look at the same kind of quotations. If you're investing in a mutual fund, you can trade them on the same exchange as you would buy stocks, for example. So I won't spend a lot of time on that either. So in terms of the risk and investments, we're going to cover this and maybe one more slide before I let you break into groups. In terms of comparing investments, guys, generally speaking, this is not always true, but generally speaking, bonds are the lowest risk form of investment. Why is that? Why is a bond a low risk investment for you, the investor? Any thoughts? What do you think? Jackson, I know you know the answer to this question. Why are bonds a little lower risk than other types of investments?
Because you're incurring someone else's debt, and they have a legal obligation to pay you back.
Exactly right. Somebody has to pay you back, or the feds come after and they take their collateral, they take their other stuff. When you get into preferred stock, you give up your voting rights in exchange to get paid first. Then we get to common stock, and then we get to ETFs. Guys, in terms of possible capital gains, common stock, ETFs, and mutual funds have the biggest potential for gains. But again, you have different degrees of risk. I don't necessarily agree with the textbook on this statement. I would say in terms of the degree of risk, other than bonds, it depends. It depends on the market. It depends what's going well at a given time. It depends who is working the markets at a given point in time. Actually, we have two more slides. We wage the health of the market. Actually, let me turn that question around to you. When you go to the doctor and you get a physical exam, how does the doctor determine if you're healthy? What are some ways a doctor would determine if your health is okay? What's that? Yeah, if you have symptoms, let's just say we're going in for a physical exam. We're just going in to see how our health is doing. Body temperature, that's great. What else? What else would tell us if we're healthy? Yes. Yeah, are we getting good breath in? Are we having good respiration? What else tells us if we're healthy? Chris? Blood pressure, that's a big one. Anything else that might tell us if we're healthy or not? Heart rate, resting heart rate. Are we standing up straight? How is our color? Do we look good? All those are indicators of whether or not we're healthy. Well, the stock market has a similar kind of approach. The Dow Jones Industrial Index basically looks at multiple stocks in the market and says, well, how are these stocks doing? If we're getting healthy responses from these specific stocks that represent a variety of industries, well, we can see if the industry is doing well. With the Dow, some people thought that was too few companies. We need a bigger reference list. So we went for the Standard & Poor's 500. That's 500 companies. And that's 400 industrial, 40 financial, 40 public utility, and 20 transportation stocks. Basically, you have a variety of big companies that if they are doing well, generally the country is doing well. In terms of the folks who were originally on the top 12 and the current top companies, hardly any of the original ones actually left or stayed on. The last company to remain on the original Dow list, the original Dow 12 that grew to 30, was General Electric, and they have recently left the Dow. Anybody who's following GE, is the company doing well right now? that is being facetious, I hope. Yeah, the company is not doing well. They were one of these companies that got involved in too many industries and weren't good at enough of them. They didn't adapt with the times. You guys are going to see GE get split up within the next couple of years. That's my prediction. That being said, guys, if I could have you in your groups, I'm going to ask you, if you have not yet picked your stocks, I'm going to ask you to give me your 3 to 4 stock picks. I'm going to ask you to email them to me. I'm going to ask you to carbon the other members of your group on that email so we're all together. If you have already emailed me your stock picks, you are free to go. Otherwise, please stay here until you've emailed your stock picks to me.